When will the pain end? Investor Ron Barron, who holds a very substantial stake in Tesla, believes this is the bottom and it's nothing but blue skies from here. There could be a rocky road ahead. We don't know, but Ron Barron has some thoughts, and I don't have thoughts, so I'm going to borrow some from Hans C. Nelson, who's joining me to give some perspective and hopefully help us sort it all out. I'm Brian. Welcome to Futuraza. Hans, what in the heck is going on? I've heard the earnings were going to be super, super bad. I saw a number of people, some with big followings on X, who said, you know what? I'm no dummy. I'm going to sell out and buy back in after earnings. How did that work out? I have not followed.
It seems like the stock may have gone up a little bit since before earnings, I think. So they may be down a few shares.
They may have trimmed their position. I mean, we can just look at the 5-day here and see, oh, that's not good for them. That's not good. You lost 14% of your shares. Well, genius, rockstar genius there. We could just take that to that and say, yeah, you've lost 21%. So that's not very big brained of them, I would hasten to point out. So investor Ron Barron on Q1 earnings, he believes Tesla robotaxi and riding V12 to Steve Jobs' house, discusses Elon Musk's comp plan, and then some brief SpaceX thoughts at the end. Why don't I just play this and let's see how it goes, and you can tell me when
this week came out. It was a disappointment for the quarter. It was the worst cash flow quarter that the company's seen in its history, but the stock was up 12% because Elon started talking about what he sees in the future and the idea of bringing out cheaper cars to go through these things. Where do you stand on what the company should be valued?
So I know Joe's not a big believer in electric cars because he likes his Porsche. But I think all the cars are going to be electric, and I think this hybrid is just a sort of a holding off action so the automobile companies don't have to lose money on the electric cars. But the electric cars, I think it's going to be all the cars 10, 15 years from now. And I think hybrids, I know you love hybrids, that's not going to last either. They're too expensive and they're not effective enough, and they're not going to be part of the mix either. So it'll be all electric. And so what I think is going to happen is that the reason the stock is down is not because of the quarter.
We'll pause it there because let's address hybrids real quick. You've seen the cost-cutting measures that have worked for companies like BYD, for most of the Chinese brands, at least for the cars they're selling in China, but also now into Central and South America. Brazil has BYDs for as little as, I think, 18 or 20,000. Mexico does as well. The Model 3 is downright affordable and still an exceptional car. If you get the rear-wheel drive Model 3, it is an exceptional car. It will have the best sound system of any factory car you've ever owned, even if you spent $100,000. Is it possible for a hybrid to be cheaper than an EV in 2030?
Maybe still in 2030, but it's kind of on the line. I mean, the thing that people need to remember is that EVs are getting cheaper to produce every year on average. And on average, internal combustion engine vehicles are getting more expensive every year. And so if those two trends play out, there's an inevitable point that they cross, even if you make the gas engine small and you put a battery next to it. And so that's where, I love the way that Ron thinks, because he just goes, what is the long-term future of these technologies? And he said, 10 to 15 years out, it's very clear. And so why would you want to be invested in the wrong technology between here and there instead of the right technology? Like, we don't know exactly when. Is it going to be 2030 that it flips? Is it going to be 2032 or 2035? You don't have to know that specific point, but you can know the general trend and where things are going, and you can make smart investment decisions based on that. And Ron just so happens to be one of the best active managers on all of Wall Street that manages actual public market funds. Some people say, well, Jim Simons is obviously the best active manager out there, and he is an incredible investor, but you as a retail investor don't get to put any money with Mr. Jim. So Ron Barron is your next best option.
It's crazy to think that all the money that they're pouring into hybrid R&D is mostly going to be lost. That's a stranded asset. All that IP for at least the integration and internal combustion sides of it are worthless. Painting a sinking ship. And you know it's sinking and you're still painting it because it looks nice. I don't get it. So let's discuss why
The reason
the
the stock is
going
down.
Well, stock's up because of the stuff that he
Well,
said.
the stock's down so much.
Well, it's down 35% year
Yeah.
to date. It's down 1%, or it's up 1% over the course of the last year.
Yeah, it's not so exciting to be up 1% in a year when everything is, the market is so strong. I don't worry about short term, but I do look around all the time and see everyone getting rich, and I'm not poor, but I haven't made a lot of progress in the last 3 years. So therefore, I think it's like a rubber band. I'm going to catch up again. So what I think about the reason the stock is down is because people were concerned that he was going to abandon the idea of having a low-cost car and go all into robo-taxis. That's the reason the stock is down. And then there was a report in Reuters said he's canceling this new factory that's going to make low-cost cars, $25,000 cars, competition from China. So there's only one company in China that's profitable, by the way. That's BYD, Warren's company, Buffett's company. And that's a company that makes $1 billion a quarter, and our company makes $4 billion a quarter. No one else makes money. Ford loses so much. General Motors, everyone loses money on this. It's much more complicated to make these cars. It's interesting. I was talking yesterday about motors. So motors in a car cost $5,000 a car. That's what these 100-year-old companies.
So let's pause there again. Some good points. If you look out 10 years and you believe that EVs are definitely taking over, you need to pick your players today. And he's right. There are essentially two companies that are profitable. Now, I had seen that Volvo might have been profitable for a quarter. I don't know if I've seen their most recent figures, but it was by pennies and on a level of volume that's kind of inconsequential compared to the global auto market. The global addressable market is ginormous. In 2023, there were 14.4 million EVs sold globally, most of them in China. It's crazy to say it, but China is absolutely leading this particular tech revolution. Thoughts on what he just said?
Yeah, I mean, two things. Yeah, if you have to pick between BYD and Tesla, why would you not pick the company that is producing more profit? The more profit that they make, the more that they can invest in continuing to grow their business. But the other piece is, if I'm picking between Tesla and BYD, at least with Tesla, I know what I'm getting. With BYD, there's still so many shenanigans that go on in the bookkeeping of Chinese companies. You still own a company that you don't actually own because it's really owned by the CCP. So I'm sorry, I'm going to once again pick an American company where at least I have some understanding of what is really going on with the company. And it does throw into question that $1 billion worth of earnings. It's probably, relatively decent, but there could be lots of shenanigans going on under the hood there, and we wouldn't know for a long time.
So I have a few hesitations on BYD. The first, when I determined a few years back, before I even started this channel, that this was the future, I said, you know what? I'm going to look at battery companies to invest in, and BYD and CATL were the two that I wanted to invest in, only to find that the stock you buy isn't really the stock. It's more of a tracking stock, and the stock that it's actually tracking is, like you said, subject to shenanigans. And I am not willing to watch a company become successful only to lose it all to shenanigans. That's like putting your Bitcoin in the wrong locker. And we've seen people, I'm sure we both know people who thought they were rich only to find out that the exchange they were on was not real. Or it was real, but really shenanigan loaded. The second point is that BYD's billion a year includes their profit from things that are not automotive, like the sale of batteries to other companies, including Tesla, like their sale of stationary storage, which is non-automotive. And really, BYD is a very big company, very vertically integrated. Also on that $1 billion of profit, worth noting, Tesla has 140,000 employees. Okay, 126,000 employees. BYD has something like 400 to 500,000 employees to accomplish the same amount of volume, which is breathtaking. Well, but yes, they're more vertically integrated, right? Are they 4 times more vertically integrated? 3 I mean, that's a big head count, and I don't understand what they're all doing. I have seen people say Tesla doesn't make very many cars compared to their head count, and we know that that's not a matter of capital efficiency. It's a matter of they also don't buy as many parts from outside companies. They are also engaged in a number of other endeavors that are non-automotive, like bot and stationary storage, and making their own parts in a lot of cases, doing a lot more engineering in-house than other companies do. There was a story I read from a Hyundai or Kia engineer who said that when Tesla introduced the light show, the CEO or some executive came to their department and said, "We want this for our cars. What's it going to take? How soon could we do it, and what would it cost?" And they found that they would have to, of course, hire a company to write the software. And then, that would take a tremendous amount of time. But then that company would first need to reach out to every supplier and validate every part of it all the way up the chain and back down, and then start testing it in a limited. And the conclusion was, we can't.
Never.
At any price, it is not something we are able to do, despite what the competencies we thought we had. And Tesla just rolled it out as a holiday up. It's not even like something you pay extra for. Why would you? I wouldn't. They thought it was cool, so they did it. And a lot of things that we get for free are like that.
It cost them $5,000. We can make a motor for $1,000. It costs $5,000. So they get.
Yeah, but then you have to have a battery that's more expensive.
Oh no, I'm talking about if you're making the internal combustion engine cars. I'm just talking about how stagnant businesses become and how used they are to operating the way they've always operated. That they don't look for new things to do, new ways to operate. Operating oriented toward making things cheaper. He can do things for $1,000 that other people cost $5,000. It's amazing. That's if he wanted to be an electric car, a gasoline car company. All I'm pointing out is that people get entrenched, and they do things without trying to make things better and cheaper and faster all the time. There's no incentive to do that. So Munger says, "Show me the incentives, and I'll show you how people act." And that's the idea, that people, the incentive, what's the incentive for someone who's 55, 60, we got to get off of this. But the idea is that that's the reason stock's down. And now
So what's the reason it's going to go up, and when?
Oh, it's going to go up huge.
When?
And now. I mean, now.
Do we want to break it there? Is there anything we need to say about that? He's right. Internal combustion technology has run its course. I'm going to hire a bunch of engineers. We're going to really get serious about this. We could reduce our costs of goods sold on an internal combustion drivetrain by 3 to 5%. I am confident. Is 3 to 5% going to save me?
Not even close.
Not even close, because the battery and the motors are still dropping by 5 to 10% a year. And it doesn't appear that we've fully run our course on that. The motors are going to remain expensive because they are still getting better every year. And the better the motor gets, the cheaper the components, the cheaper they're able to put them all together. There's a lot of runway for continued improvement. Are you ready to roll into when does it start?
What's the reason it's going to go up, and when?
Oh, it's going to go up huge.
When?
And now. I mean, now is the bottom.
Okay.
And so what they're doing is they're going into robo-taxis, and they're going to make the low-cost car. So they're making the low-cost car, except they have excess capacity right now. They have capacity to make 3 million cars a year. They're making 1.8 million. So there's 1.2 million cars they can make extra in an existing facility with no more capital, and they're not going to make the cars direct cost as cheaply as they did before, as they expected to. But overall, until they expect to do 5 million of these new cars.
Can I ask you a robo-taxi question? Because that is, I think, the future of this company,
Yes.
and a lot of the value is relying on that.
Mm-hmm.
The question is what you think the genuine timing of a robo-taxi that's reliant on cameras only, and this has always been the question about, can you do it with just cameras relative to what Waymo and Cruise have done, and there's been even questions about that, using the radar and the LiDAR and the whole rig that lives on those vehicles.
Well, we have a small investment in Cruise because I wanted to see what they're doing. And Waymo is, their cars are $250,000.
because of all of the sensors and all of
and they're trying to take cost out, and for us, it's software. And so basically, the advantage that we have right now at Tesla is that they've sold 6 million cars, and 3.5 or 4 million are collecting data. So the data is what's really valuable. They're doubling their.
We could do this for days, and people need, if you want, this is a great interview. I will leave a link to it, but this is just great. Let's talk about some of those things that he just said. I'm not offering financial advice. I never tell people when to buy, when to sell, or even what to buy. And the people that I learned from did the same. Rob Maurer never told me to buy stock, but I listened to him and I made my own analysis and I looked at other people's track records and other people's, fund managers. And that's why I was able to buy at an opportune time. I have also bought at inopportune times, much less. My average cost is still under $20 a share, despite having bought twice above today's trading price. But this is Ron Barron talking, and you can choose to listen to him or not. What is your take on what we just saw?
Yeah, this is definitely a point that I think we are turning the corner on the way that Tesla is going to make money. It is going to be more and more on software. I think that the release of the free trial of FSD combined with then Tesla sending the signal of, hey, so those two signals have told me everything that I need to know about Tesla's strategy for pricing and selling software moving forward. That they're going to be making more and more capable software every week, every 2 weeks, every 3 weeks. It's going to be more valuable. But at the same time, they're going to be willing to be flexible on pricing to find something that a user who has a vehicle that has the sensors could use software on, and our revenues, and that's just on full self-driving software. This is even before we get to robotaxis. And I think Ron looks like he's seeing some of the same things, that he was extremely impressed by the rides that he got. He had a ride with actual FSD engineers around Tesla engineering headquarters, is what it sounded like. They went and visited Steve Jobs' house. And so he's seeing the same thing, that the software is essentially ready to begin earning more revenue, and that every year from here forward, they'll just earn more and more and more revenue from software. And as they do that, it makes every single car that they used to have and every single car that they sell in the future more valuable to the company and a source of revenue. And so, I think that that's going to be clear to investors in the financials probably over the next 12 months. So I think that calling the bottom being in is, it's a decent call right now. I think that this is a good entry point. If I had spare cash, this is a place that I would be loading up.
I get, famously, I am not a gambler. I'm an investor. When people say, oh my gosh, it's down $10 today, you must feel stupid. I say, why would I care? It's in my retirement. I can't touch it anyway. And I'm not trying to outsmart the Wall Street analysts who do this for a living. And I'm not trying to outpace the algorithms who can trade at lightning speed before any human could possibly react. Those guys could make money. Some of them do. Half of them don't. That's worth noting. On the issue of who's going to win FSD, a year ago, I would have said it could be Cruise or Waymo. But now Cruise, we found out, was using digital Sherpas to guide the vehicles. They had their own mechanical Turks in there making things work. And that's not only a approach that doesn't scale well, but it shows a violation of trust in the consumer and the investor that I think will has already come back to bite them and will continue to do so. I don't trust anything they say. Now with Waymo, I had higher confidence. I didn't realize the cars cost $250,000, but it makes sense. You start with an expensive car and then you manually add the most expensive sensors on the market, and a lot of them. That's a problem that's going to come back and bite you as well. But my real problem with Waymo is I don't think we can see beneath the surface. I think they might have some shenanigans afoot that we can't see, and they haven't come to light because they haven't run over a person yet. So with those, the reason I am still not bullish on Waymo is because we can see that their approach does not scale. Why are they only just now adding an additional city? Shouldn't they have? They've been testing for years. You would think that by now they would be adding a new city every month. And the answer is it takes too many engineers to drive that one car. And they can't afford to scale the engineers, or they can't afford to scale the LiDAR HD mapping that gets to centimeter accuracy on every curb and pothole. That's great, but if you can't scale, what good is it? And they still don't drive on highways, which is another bit of frustration and raises some real questions in my mind.
Yeah, I would agree. And I don't know if the engineering headcount has more to do with, number of cars in the fleet, or if that is on, you would think that somebody would be allocated to expanding to new cities, but the rate at which they're doing that is just nowhere near fast enough. And so, yeah, there's multiple points at which they're more expensive and less scalable. And that is just not going to be competitive, assuming that full self-driving is a general purpose solution that works everywhere. This is why I have spent numerous hundreds of hours researching machine learning and all of the different technologies that are going into doing what Tesla's doing, is to answer that question for myself. Is this possible that this is in fact the right general purpose solution that will both work and it will work everywhere? And the endpoint of all of that research says, yeah, Tesla's got this in the bag. Just a matter of time and turning the crank.
It's exciting. We're living in the future. I never thought it would get here. I'm, still waiting for some of the predictions from, Back to the Future 2 to materialize, even though 2015 has come and gone. I've seen some companies like Honda is not looking to the future. They plan to go all electric by, guess what year?
2040.
Correct. It is 2040. 2040 is a year so far in the future, it didn't exist in the movies I watched as a kid. They were set never that far out. That's insane. But that's also a testament to how old I am, which I'm also not excited about, but it beats the alternative. All right. So what did we miss? What did we misunderstand? Leave it in them comments. You've got to tell us how we're doing. Are we getting this right? By the time this comes out, we'll know, was this the bottom? Because anything can happen, and investor sentiment is not always tied to performance. So as we've seen some of the real big brain geniuses out there this week discover themselves firsthand. Congratulations. Some lessons are cost more than others. Smack the like, subscribe, head on over to Hans's channel. There will be a link in the description. So stay tuned, stay juicy, and I cannot wait to hear from you clever robots while you're sitting in the back seat of your very own robotaxi.